Hello everybody, welcome to my free forex trading course, lesson 13. The last time we ended the candlestick patterns. So today we are talking about the market structure. So in the market structure, we talk about the trending market and how to draw a trend line. So these are the two things we shall talk about today. Now, market structure. Now, before I start, in case you are new to this channel, make sure you hit the like button. If you like what I'm doing, hit the like button and hit the subscribe button. Also, click the notification button so that when I post the next video, you will get the notification. Now, let me continue. Now, the market structure. The market structure. One of the most important skills that you need as a trader is the ability to read the market structure. It is a critical skill that will allow you to use the right price action strategies in the right market condition. You are not going to trade all the markets the same way. No way. You need to study how the market moves. You need to study how the market moves and how traders behave in the market. So, what is market structure? The market structure is the study of the market behavior. That is market structure. The study of the market behavior. The study of how the market reacts. The study of what is happening in the market. That is market structure. And if you can master this skill, when you open your chart, you will be able to answer these important questions. What the crowds are doing. These are the questions you will be able to answer if you are able to read the market. You know what the crowd is doing. You will know what the crowds are doing. Who is in control of the market? You need to know who is in control of the market. Is it the buyers or sellers? These are the things you need to know, and market structure will help you know this. Then what is the right time and place to enter or to exit the market, and when you need to stay away? Because, of course, you know there is a time to enter the market, there is a time to exit the market, and there is a time to not even do anything, just stay away. Once you open your chart and you see what is going on there, you stay away. Why? Because you know what is happening, and it is not the right time to get in. Through your price action analysis, you will experience 3 types of markets: trending markets, ranging markets, and choppy markets. Those are the 3 types of market you will see. Those are the 3 types of markets we have. You have the trending market, you have the ranging market, and choppy market. Today we shall discuss the trending market. Now, let's continue. The trending markets. When do we say a market is trending? Trending markets are simply characterized by a repeating pattern of higher highs and higher lows in an uptrending market. and lower highs and lower lows in a downtrending market. So what does that mean? It means we have two types of trending market. We have upper trend, we have lower trend. When do we say upper trend? When price is going up. When do we say market is? When do we say a trend is low? When the price is going down, that's when we say a downtrend. So we have upper trend, we have lower trend. Now look at this. This is an example of an uptrend market. How do you identify it? You see, it is making higher highs and higher lows. What do I mean by higher highs? Now, in the market, when you open your chart, we have the highs, we have the lows. The upswing, the upper swing point, that's where the reversal took place, like this, is the high. Then, while the down, where the price reversed down, is called lows. So all these reversal points up are called highs. The reversal point down are called lows. So when a high now makes another high, it is called higher high. So as it's making another high, it is called higher highs because the high is increasing. That's why you call it an uptrend. So an uptrend makes higher highs and higher lows because the downswing point is called lows. The upper swing point is called highs. So you can see the line I drew. You can see that it's going up. That means it is an uptrend. You can see this. It even started from here. High, then it goes higher, so you call it higher highs. It makes another high, you call it higher highs. It's making series of higher highs. So that's why you call them higher highs. You don't need to cram it. It's just a logic. Simple English. As it's going higher, the swing point, that's what we are talking about here. The reversal point. And where it's reversing up is called the support. The resistance. The up. Where it reverses up is called resistance. So where it reverses down is called support. When we get to support and resistance, you will know better. So with this type of market, you call it an you call it an uptrend. So when you open your chart, you need to know what is happening in the market. With this now, this is an uptrend. So you know what to do because it is an uptrend. There is a way to trade an uptrend market. Now, as you can see in the example, the market is making series of higher highs and higher lows, which indicates that the market is uptrending. It's going up. You don't need indicators to decide if it is bullish or bearish. Just a visual observation of price action is quite enough to get an idea about the market trend. Some people use indicators to know whether it is an uptrend or a downtrend, but you don't need an indicator. With your visual eyes, with you opening the chart, you will know if it's going up or going down. Now look at this one. Look at this one. What's happening here? It's making, now as you can see, the upper is what is called what? The highs. The lower reversal point is called what? The lows. Now, starting from here, this is a low. This is a high. So if the high goes down, what do you call it? You call it a lower high. So when it gets here, you call it a lower high. As it goes down again, you call it another lower high. As it goes down, you call it lower high. Why? Because it's going down. It's going down. So you call it lower highs. Because the upper reversal point is called highs. This up is called highs. The down reversal point is called lows. So the same thing applies here. This is a low. So as it goes lower, you call it what? Lower lows. As it goes lower, you call it lower lows. Lower lows, lower lows. Why? Because it's going down. So it's making lower lows. So you don't need to cram. What is lower lows? What is higher highs? What is lower highs? What is no? Once you know the highs, so if the high goes down, that is a lower high. As it goes down, lower highs, lower highs, lower highs. So as the lows, you know the lows. So as the low goes lower, it's called lower lows, lower lows. Now, when you have something like this, this is a downtrend. When the market is making series of lower highs and lower lows, you call it a downtrend. Very simple. There is no need to cram anything there. The example above shows a bearish market. As you can see, there are a series of higher lows and lower lows, which indicate an obvious downtrend. Trending markets are easy to identify. Don't try to complicate your analysis. Just look at the chart and see what the market is doing. Once you just open your chart, you will see it. If it is doing series of higher highs and higher lows, it is simply an uptrend. Conversely, if it is making series of lower highs and lower lows, it is obviously a downtrend market. That is it. So there's no really any worry. Once you open your chart, you will see it, whether it's an uptrend or downtrend. Now, according to statistics, trends are estimated to occur 30% of the time. So trends don't happen all the time. If you open your chart, it doesn't happen all the time. So according to statistics, they occur 30% of the time. So while they are in motion, you've got to know how to take advantage of them. And there's a saying that trend is your friend. Because when you ride with the trend, it is your friend. So it is because it's better to ride with the trend than moving against the trend and losing money. When you ride with the trend, it's easy for you to make money. But when you are against the trend, because some people trade against the trend. Some people trade against the trend, and most of them lose money. Why? Because they are not able to identify the trend. So you need to know the trend of the market. To determine whether a market is trending or not, you have to use bigger time frames such as 4 hours, that's 4H, the daily or the weekly time frame. We've not discussed time frame. Later we'll discuss time frame. Time frame, what is simply time frame? Time frame is the period at which price is formed. Let me use the candlestick as an example now. Time frame is the period in which the candlestick takes to form. The time it takes to form. That's what we call time frame. We have different types of time frame. We have 1 minute time frame. 1 minute time frame. The candlestick takes 1 minute to form. So after 1 minute, another one will start forming. It forms after 1 minute. That's 1 minute time frame. 5 minute time frame forms every 5 minutes. So it takes 5 minutes to form. Once the 5 minutes is over, another one will start, upward or downward. So and so on. There's 5 minute time frame. We have 30 minutes. We have 15 minute time frame. We have 1 hour time frame. We have 4 hours. We have the daily time frame. Some trading platforms have 8 hours time frame. Like TradingView has 8 hours time frame. So we have the daily time frame. Daily time frame, that one takes 24 hours to form. Then we have the weekly time frame and we have the monthly time frame. So that's time frame for you. So and higher time frames are advisably used, should be used to determine the trend. Don't go and use 30 minutes or 15 minutes to determine the trend, because you don't know what's happening in the bigger time frame. Because the bigger time frames, they drag the smaller time frame. When we get to time frame, we will talk about that. Now, never try to use the smaller time frame to determine the market structure. So always use the bigger time frame. Now, how to draw a trend line? How do we draw a trend line? So your trend line can help you to determine the trend of the market. Now, how do we draw the trend line? To draw a quality trend line, you will need to find at least 2 minimum swing points and simply connect them with each other. The levels must be clear. Don't try to force a trend line. You don't try to force it. It must be clear. If it's not clear, that means it's not it. So don't use smaller time frame to draw trend lines. Use always the 4 hours and the daily time frames to find obvious trend lines. Now look at this. You can see that the line is drawn at the swing point. At least 2. It can be 3. Look at this. There's a reversal here. So you draw it from there to here. Here you can see that it's following that line. That's the upper line. You can do that. You can do the same down too. But we are focusing on the one up now. That's the higher one. So you can see. And as you can see, that price is respecting the line. So the line is serving as a resistance. So trend line can serve as a resistance where price will reverse. So if you draw your trend line very well, you can trade that trend line. You can trade it. So once price gets to the trend line, you enter the market because you expect a reversal to occur. So you can trade the trend line. Now look at it now. Assuming you drew the line from here to here. So as soon as the price got here, you enter the market. You make profit here. So after you have drawn this, you know that once it gets here, price will reverse. So you take profit here. So once it gets here too, you enter the market again. You sell again. No, because you know it will go down. Some people will also enter the market here. They will enter the market here. Why? Because they believe it will go up. But that is not advisable because this is a downtrend. So it is better to sell. So in a downtrend, you sell, don't buy. It is advisable to sell. Some people buy and make profit. It depends on your level. But it is better to sell in a downtrend and buy in an uptrend. You can see the market respects the trend line, and when price approach it, the market reverse and continue in the same direction. When the market moves this way, trend lines help us to anticipate the next impulsive move with the direction of the market. When we say impulsive move, that's the main direction of the market. That's what we call impulsive. The main direction of the trend. The direction of the trend is the impulsive move. Is the impulse. It's called impulse move. Now, look at another example of an uptrend. See this. This one is going up. Why? Well, it's making higher highs and lower highs. See, look at the line. Let's assume you drew the line from here to here. You know that once price comes to this line again, you do what? You buy. That is it. Why? Because of the trend line you have drawn there. So you know that once immediately price comes back to that line, you just click your buy. You buy. And as you can see, after price moved from here, it got here. So you would have made some profit there. So this is an uptrend. And you can also draw the line from here too. So it will help you to know when to exit the market. So this line is serving as what? As resistance. It's serving as a resistance. While the one down here is serving as support. As you can see, the market respects the trend line. And by drawing it the right way, we can easily predict the next movement upward. So it is very important for you to determine the trend of the market, so you know the direction to trade. You not just trade anything. So if it's an uptrend, you do what? You buy. So once it comes back to the trend line, you do what? You buy. Or if it's a downtrend, once it goes up back to the trend line, you do what? You sell. So that is it about drawing trend line. Those are the advantages of trend lines. So trend lines can serve as support and resistance. It can help you to take profit. It helps you to know where to take profit. It helps you to know where to exit the market. So that's it. If you have not subscribed to my channel, please make sure you subscribe, hit the like button, subscribe to my channel, and hit the notification bell so that when I post another video, you get the notification. So see you in the next class.